This week, the Australian dollar was unable to extend the bounce on Australia's record trade surplus, remaining within a 76 to 77 cent range. It did get a little bit of support from the Reserve Bank meeting on Tuesday, when the RBA kept the cash rate steady at 1.5% as expected, but was quite optimistic on the growth outlook. The RBA has stuck to its forecast of 3% growth by the end of 2017 and also in 2018. Westpac also sees scope for the growth rate to recover from current pace, which is below 2%, to about 3% by the end of this year, but we have our doubts about 2018 as residential construction wanes and exports start to slow. But while the RBA is quite bullish on the growth outlook, inflation is still low, so there was no hint from the RBA that they're thinking about a rate hike anytime soon. Indeed, market pricing is now roughly flat for the course of 2017, not pricing in great risk of either a rate cut or a rate hike, and of course that's in line with Westpac's view for steady rates. Commodity prices remain supportive for the Australian dollar, with Chinese markets returning from their week-long Lunar New Year holidays in good spirits and helping keep the iron ore price very elevated above $80 and in fact pushing up to $83 a tonne. But there was a bit of disappointment for the Aussie earlier in the week from the retail sales report for December, which showed a contraction in turnover in the month. Heavy discounting by supermarkets seems to be one factor trimming retail turnover. One of the factors capping the Aussie dollar ahead of the 77 cent level this week was a rebound in the US dollar. Federal Reserve officials continue to talk about hiking rates 3 times this year rather than the 2 that are priced into markets. And there was also a bounce on the US dollar as US President Trump claimed that there would be a comprehensive tax proposal delivered within 2 to 3 weeks, which is sooner than markets were expecting. While the Australian dollar has been range-bound against the US dollar this week, it has shown strength against other currencies. The Aussie rose above 71 cents against the euro this week. That's a high back to May 2015. Along with loose monetary policy from the ECB, the euro has been undermined by concerns over French politics. This week, Marine Le Pen launched the National Front's presidential campaign, including a pledge to leave the euro. And Le Pen is actually polling quite well, particularly given pressure on other candidates. So there's a very good chance that she at least reaches the second round runoff. The Aussie dollar also rose about 2 cents against the kiwi to about 106. The kiwi was undermined by the Reserve Bank of New Zealand policy statement and comments from Governor Wheeler indicating that markets had got ahead of themselves when pricing in a rate hike before year end. Australia's data calendar is quite busy in the week ahead, including surveys of business sentiment and consumer confidence. But the main focus will be on Thursday's employment report. This has been very mixed of late, and in fact that's the word that the RBA used to characterise the labour market in its statement this week. That's likely to remain the case in January. Overseas, the focus will be on Fed Chair Yellen testifying to Congress. While Fed officials continue to warn that every meeting is live in terms of the interest rate decision, markets are sceptical, pricing only about a 25% chance of a rate hike in March. This is potentially too low, so there's a chance that Yellen talks up the economy and the risks of a move in March, and that supports the US dollar. We expect that this is potentially one factor that will help keep capping the Aussie dollar around the 77 cent level, but it should continue to find support around about 76. We'll speak to you next week.